Okay, hello and welcome everyone. My name is Jason Allen Jankowski with netwinningtrader.com, and I want to say thank you for all of you that are out there listening. I appreciate you taking a few minutes out of your Saturday to give me a few minutes of your time. I want to get right to work, and today's broadcast, of course, is titled Weekly Forex Market Outlook for the week ending 09/21/2024. That means today. Well, listen, I got a couple of quick insights for you that we're going to share real fast. And before I do that, of course, though, I got to make sure the regulators are happy, because all the regulatory people that are out there listening, because, they're of the opinion that you're not smart enough to figure this out on your own, so you need their help. So they're going to make sure and burden all of us with how much money we're all going to lose and how difficult this is and how risky all of the trading world can be. And yet it's the single biggest occupation on the planet, but we're not going to have to talk about that today. So be ready. Trading in futures, options, and Forex, that could be a loser for you. You could lose money. People can and do lose money. So everything we talk about in here is opinion. It's not suitable for everyone in light of your personal tolerance for risk or your personal financial tolerance for risk. And everything we talk about in here is considered opinion. So there's no guarantee or warranty of future results. Absolutely nothing that goes on in here can be considered anything other than opinion. And my opinion is you're smart enough not to need one of these every freaking time we talk. That being said, let's get to work, guys. First of all, here's what went on this week. It's all about the interest rates. Um, you know, it's been pretty much on the table now that we're going to have to start doing something about interest rates and moving the economy forward. So, what does that mean? Well, according to the Federal Reserve, they cut rates to 5.0 from 5.5. Now, that created a little bit of volatility in the markets, as I'm sure you saw, because that was a little bit bigger than expected. However, some of our trading partners did nothing. The Bank of England, for example, no cut, no change, and the vote from the Monetary Policy Committee was actually 8 out of 9 ministers to hold rates firm. In other words, they didn't see any need to do anything when the United States cut rates 10%. See, it's not a half a point rate cut; it's 10%. 5.5 minus zero point 0.5 is about 10% change in the value of interest. That's pretty significant. Especially since at the same time, did you guys get one of these in the mail? Because people in the financial world are usually on your side, aren't they? My credit card company just sent me change to terms and conditions of using one of my credit cards, and they're raising the interest rate 5%. I mean, it used to be against the law. It's called usury to charge 30% or more on a loan. People used to go to jail for that. Now, if you're Visa or Capital One Bank, you can charge 34%. I think that's a little egregious, and I don't know what's going on there, but when you really think about it, who's getting the squeeze there? It's not the banks. They can borrow money for less money now and charge you for more. I don't like that personally, but interesting. So, Fed cut more than expected. No changes with the Bank of England. And, of course, no changes with the Bank of Japan. Universally, one of the least professionally managed economies in the globe. Bank of Japan still at negative interest rates. They're looking to lend you money if you put money with them. Makes no sense at all. U.S. data for the week, not so good, but a little glimmer in there too. U.S. Empire Manufacturing, much higher than expected at 11.5. And I think that probably reflects some optimism ahead of the political situation, the election that we have here in just a few weeks. I think the market is beginning to set up for the possibility of a Trump win. Um, Although there are, tremendous amount of people out there who still, uh, I guess, are voting with what they believe to be the important issues. Um, but I think if you're a Harris supporter, you need to take your head out of your butt and look around at what's happening. 4 years of failed Biden economic policies are not going to get better. Um, so, what is it that the Empire Manufacturing Index might be reflecting? I think they're saying, look, it's time for a change, man. However, up to that point, fact is, um, CPI, PPI were about expected, but no real surprise there anyway. They were in one or two little pieces here and there, core and all the rest. Looking like, you know what, this is not getting any better. So what's that glimmer of hope about? A change in economic policy under a better qualified president, perhaps? I'd like to believe that. National Association of Housing, that number still in contraction. In other words, building still. Well, we're going to have some housing starts coming up this week, but really, you know, something fell flat. And when houses aren't being built, the thing that's really scary is that government that is trying to create a world where every one of their um, constituents, every one of their populace is dependent upon them. The last thing they want is you owning your own home. They want you in an apartment building. Well, an apartment building owned by the government and lent to you at a very low amount of money so that, they can control what you see, hear, and think. And don't, I'm serious about that. That's a big problem. You can look into that if you want. Right now, they're building more apartment buildings than anything else. More apartment buildings than there are single family homes. So I think you got to look into this housing data a little more deeply. The housing stats show there are building a lot of property, but it's not single family houses. That's the important thing to remember. So, I think what's happening here, and in my view, I think the data that we've gotten the last couple of weeks, it's consistent with a lack of insight and a lack of leadership among our trading partners. I think people are looking for the U.S. to take the lead during the next 6 months of global investment and growth. And I think, obviously, with the U.S. presidential election on the horizon, I think politically markets are going to respond positively to a Trump win, and I think they would respond negatively to a Harris win. Um, I think really what we need to do is be really, really careful not to buy into any positive rhetoric if it's a Harris win. I think that would be devastating for the country, and I think that maybe the rest of the world knows that too. But they're still looking for leadership, I think, out of the U.S. And I think that this could be a really significant election economically because I don't think we can handle 6 more years of communist Marxist philosophy under um, what would be the female for uh, Der Fuhrer, Das Fuhrer. I don't see Harris as anything but really a problem personally, but that's me. All right, next week, what's happening? Well, we got EU and US manufacturing data. We have Aussie rate policy coming midweek. The Reserve Bank of Australia will be announcing their interest rate policies. I would expect them to follow along and play suit. Nothing's going to change on their end. They're watching what we do next. Bank of Japan has some inflation numbers. Don't expect that to be anything huge. U.S. gross domestic product. This could be a market mover later in the week. What will the world think if our GDP numbers are sagging? Michigan on Friday, of course. Economic sentiment. People tend to get really positive about things heading into an election. Be interesting to note to see if the trend is still in place there, or people are beginning to realize, wait a minute, you know, one presidential candidate probably means a step forward, the other one probably means a step back. What's going to be the economic outlook, the positive optimism there? Um, Getting right to a little bit of trader wisdom so we can all clear our heads and get back to the business of how do we make more money this week coming up than we did last week that we just finished. Today's quote on this week's Trader Wisdom is from the racing driver Mario Andretti, Formula One world champion, IndyCar world champion, won the Indy 500. Unfortunately, only once. Interesting story about that guy. But here's what he had to say. He said, if everything seems under control, you just aren't going fast enough. I find this quote to be particularly enlightening because, for those of you that aren't aware, my early years, actually before I started trading full time, I had hoped to be a full time professional racing driver. And I went to school at the Winfield School, which is in France, and raced Formula Renault in Europe. And then in Canada, raced Formula Ford 2000, and also did the Jim Russell British School of Motor Racing in Canada and the Skip Barber School here in the United States, and almost did what was called Barber Saab at the time. And I ran out of money. And I can tell you with absolute certainty that driving a racing car is not what people think it is. And when Mario says, if everything seems like it's under control, you just aren't going fast enough. And what he meant by that is that if you're driving at the very edge of your ability and you're driving at the very edge of the car's ability at the same time, that's the only way you can find out how good you really are. And if you are at that point for 2 hours at a time during an entire start to finish of a road race, that's the only way you're ever going to know how good you are. And if everything seems under control at that point, you just don't have a clue what you're doing. Because you're never going to be in control and win. You've got to be past the edge. You've got to be on the edge all the time and then know when you've got to go just past the edge and push the car one more edge, one more side to the limit. Push yourself one more time. That's where true champions come from. Now, what does that have to do with trading? It has everything to do with trading. I want you to really think about this. Are you trading to win? Or are you trading not to lose? Are you looking to make, I'm looking to make a consistent, 18% a year, beat the S&P? Or are you looking to get rich? Double or triple your account balance in 90 days or 120 days. People do it. I know people do it. I've done it before myself personally. I can tell you the opportunity in the market is there. It's not about being reckless. It's not about guessing. It's not about taking huge risk. It's about understanding your limitations versus your true ability. How are you going to find out how good you are unless you press it to the limit? Where is that edge, that limit for you? Are you afraid to do that? Are you afraid that you'll make a bad mistake and you'll blow yourself out? Okay, where is common sense and pushing the envelope balanced? Where is true discipline and grabbing the brass ring meeting? Where is that? You see what I'm saying? What I want to encourage you as a trader to think about and remember as we go into this next week, if you've got an approach that's working for you, You've got a method that's working for you. How far does that really go? How far does that really go? Can you take and move your performance up another notch or two by just doing a couple of little things? Like I'll give you for example, I know a lot of people like to day trade. I personally do not day trade. I think day trading is harder money. It's really hard to make money day trading, in my opinion. I think there's easier ways, but people who do find a good skill at day trading and they like doing it and they're good at it, good for them, then go for it. Well, a lot of times they'll pick a number and they'll buy that number all the time and liquidate as the market rallies. And so they might get 3 or 4 shots at that same number during the course of a trading day. Well, if you have been buying the same price point roughly 2 or 3 times during the day and you get a fourth time there, if it's going to bounce from there, you got support is really starting to get strong there. Maybe you should increase your trade size. Maybe you should say, well, maybe it's time to come up to a 2 lot instead of a 1 lot on that fourth trade of the day. Maybe run a tighter stop and trade larger and see what happens. That's pressing the envelope. That's pushing it past the control point. Deciding whether or not you're going to take advantage of what the market's offering you. You know, um, my personal experience has shown me that when something is true, it's true all the way. So if it's true all the way, this is time to load up. Yen was trading at a 39-year high a few weeks ago. And you guys short it? I did. Made some nice money on the way down. But I was kicking myself because the volatility kept knocking me out with larger trades. 37-year, 38-year, 39-year high. It ain't time to do a 1 lot, man. It's time to load for bear. See if you can put it out there. I got spanked a few times, lost some big money on the way to making some nice money, which made it worth it, but, I was out pressing the envelope. And I think everyone needs to learn how to do that. Okay, that being said, let's get to some chart studies. I want to tell you what I think of price action here from the net winning trader point of view. So let's go ahead and get charts up real quick. Now, this might take a second for it to show. Are we getting anything there? We're live now. Good. Mark Brand said hello. Buy Visa MasterCard, he wants to know. Could be. Defaults probably going up. Yes, defaults are going up, as a matter of fact. Do we have... Can you guys see charts yet? I got to make a change here real quick to what I see. We should be good. You guys should have charts up, clean and green. We're good? We there? I just want to make sure because I'm using a new piece of software. We're trying to up our game here a little bit, speaking of pressing the envelope. And I got to learn this new piece of software, so... Live charts. Okay, real quick. As you guys know, from the net winning trader point of view, we do not aspire to use technical analysis the same way other people do. And in fact, it's our opinion, my opinion, that it's a waste of time. It's useless. It can't help you win. The more time you spend using technical analysis, the less money you're going to make. That's my opinion. So we don't have any. What we try to look for here are points of reference and things that tell us what the underlying structure of the market is. In my view, based on what happened this week, this is really important. Right now we have pounds up here. Now what I want to do is show you something that I think is really significant. From last week, here's our rejected low, happened on a Wednesday. Rejected low this week, happened on a Wednesday. And we look at drawing a line across our rejected low area, not necessarily the price, but the area. Notice what we have here. We have the beginnings of a really solid uptrend that could last quite a few weeks, I think. 50 bar nicely over the 100 bar now. the 100 bar right along the rail of our uptrend and moving at a nice 45-degree angle as the 50 bar moving in the next week looks like it's going to expand. What does this mean? Dollar under threat. Um, Smart money knows where smart money goes. Smart money don't go into the dollar when interest rates are coming down. It goes elsewhere. Where does it go? It goes into other investments. It doesn't go into interest rates, which means people tend to sell dollars. Now, does that mean the dollar selling is going to automatically happen? No. But I think what's important is this volatility. When the news came out, pounds rallied to a fresh high and then were immediately crushed to the low on the day, hours later into the overnight session, and then recovered to make fresh highs on the week by the end of the week. What does this tell you? This tells you that the big money is interested in the short side of the dollar. But it's not going to be an easy bet. It's going to be all over the board. So be careful with your entries. I would play it for the next week or two from the short side of the dollar. Euro, actually bigger volatility. Euro made the high for the week and the low for the week in an 8-hour period of time, and it covered huge distance, almost 112 down to under 110.70. Now, it's not a huge distance in price, but it's a huge distance in price action for the week because we have been so tightly constrained. What it's starting to say is things are changing. Covered the ground distance in the same direction. I mean, that's really important. But at the same time, look at this, guys. I'm telling you, it's right along the rail. Little rejection low here. I mean, where do you want to place this trend bar? Could put it there. Could put it there. In any case, I think we're right along the rail. Japanese yen was textbook for what we teach. Textbook. Moved down to a trend line and rejected, and the market's moving right along that trend line, holding between, all the buy points are between the moving averages into the end of the week. Most likely will be the same next week. The 50 and the 100 bar most likely will both be along the trend line or higher, and all sell-offs down into this area here are going to be bought. Yen, of course, inverse relationship to the dollar. Why? Because of the inverse relationship to interest rates. Canada, this is a mystic. Don't count that. And at the end of the day, don't count that. The important issue right here is look at this. Flat right across the top of the market. If we look at the daily time frame, look at that. Right across the top of the market with right underneath there the daily time frame is starting to turn lower as the market moves lower, bounces. I think we're going to see just a huge amount of selling above the 36 handle on this pair for a move back down to the low end. We'll see. I mean, I really honestly, have to tell people all the time we don't know for sure. I wish we did, but when it comes to probabilities, that's what we focus on. And the probabilities that we focus on have to do with what's the market is telling us from a standpoint of observation. We're not looking to predict anything. What we're looking to do is understand what's happening. If you understand what's happening, then understanding what's likely to happen next, you know, it's even. It's pretty good risk. People say, well, we can't predict the weather. No, but you can look outside your window and see if it's raining. So if it rains 4 days in a row, how likely are you going to get the tractor in the field this week? Probably not. What does that tell you? You see what I'm saying? It's not about predicting when it's going to rain and how much rain is going to fall so we can figure out how much crop we're going to have. It's about using our common sense about how this really works. You see what I'm saying? All right, so that being said, moving on over here real quick. Tony says there is a delay on what you say. I don't know what that means. Oh, from when you see it on the screen till I don't know what to do about that. I don't know. I don't know whether I don't know how much delay is involved. Okay. Anyway, with regards to price and price charts, guys, I would be careful to be on the short side of dollars into the next week, with the exception of dollar yen. I think dollar yen has more upside, but eventually that will be a sell. So I think there's more upside. Dollar yen will top wherever it does, and it'll come down again. We may see both sides of that. But for right now, I would be heavily leaning towards short dollar in the next week on strength. Any strength you see in the dollar, I'd be a seller of that. Okay, let's go back to our PowerPoint and let's finish up for today. One quick thing how to get more from this broadcast. I want you to consider me your friend in the business. You can just go ahead and email me, jaj@netwinningtrader.com. Ask me any comments or questions. We did have one that came in that I wanted to address. A guy, I don't know if he's a new trader or not, Vince. He said, where do you get your data? Because I guess he's overwhelmed with the data look. Some people watch CNBC and other people watch other news channels. And boy, all you got to do is hit Google and do a Google search, and you can get all kinds of sources for data. So Vince wants to know, where do you get your data? So I'm going to go ahead and show him. And a lot of you guys are probably well aware of this already. So just remember, where is it here? PowerPoint, Wheatley. PowerPoint. Uh-oh, won't let me do this. Let me see if it'll let me do this. It may not. I don't know if it will. See the window, display capture? What if I switch to display capture? Let's see this one. Okay. Tony, let me know if I want to switch to display capture as opposed to screen capture to put this up for Vince. One of the guys that he said, I want to know, where do you get your data? Where do you get that information? So I wanted to show him this. A lot of you guys are probably very familiar with this, but I want to make sure that Vince gets an opportunity if he's there today, or if he's going to listen to the broadcast recording. Can you see my screen? Tony's typing right now. It should just show. It says I see data. Right. All right. What this is, guys, if you look in the corner, may be hard to read because of the screen size you're looking at. This says Forex Factory. If you look in the URL, it's forexfactory.com/calendar. Right? Some of those out there, you're probably well aware of Forex Factory. If you're not, this is what this is for. Vince isn't, so apparently I want him to see this. When you get to the navigation, it has the current month. You hit this little button right here, and it gives you the entire week worth of data. Entire week worth of data due. So starting on Sunday, Monday, Tuesday, for every week, it shows you what's due, what's coming in, what's available for each of the currency pairs that are called the majors: New Zealand, Aussie, USD, Canada, Euro, pounds, etc. I like using this because it goes from front to back. It says every day at what time there's data that's due out and what it is. Some of it's more important than others, and that's okay. We got to kind of watch that. But if you look right here, it's all the good stuff that you need. And another thing that's nice for those of you that might be new traders, one of the things that's nice about it, if you go to any individual thing that's listed, right? There's a little manila open thing. It says open detail. If you click on that, it tells you all about that piece of data. So if you were to sit here and just go through all this stuff on a regular basis, it'll give you a very healthy, concise, easy to understand way to appreciate the fundamentals. Now, in my opinion, guys, this is important. The fundamentals don't really matter. What matters is what people think it's going to do to their money. When they think they're going to lose, they do certain things. When they think they're going to win, they do certain other things. What we're trying to do at Net Winning Trader is form a consensus to anticipate those behavioral changes, what that looks like when the market's trading. That's what we're trying to get an edge to. So I want to remind you that this is good stuff. It's wonderful to know about. I love reading it. This isn't going to make a huge difference. What's going to make a huge difference is if you can learn what to do with this stuff regularly. But the reason I like Forex Factory, and it's called the weekly calendar, right? See, navigation right here, September, the weekly calendar is highlighted in green. Right up here, forexfactory.com/calendar for the week. The reason I like it, the reason I like it is because it's concise and it's in one spot. It's easy to understand. So that being said, let's get that out of there. And this is back up, so we're good. Marauder53 says, "Hi, Jason. Been years. Glad to see you're back on the air. Great to be back. I don't know how long they're going to let me stay. So let's do the best we can, guys." All right. Last but not least, let's see if we have one more thing to go here. All right. So if you want to find out more about what my latest gig is and what I'm up to, come and have a look. netwinningtrader.com. Business partner Tony's Shepard is also available at support at netwinningtrader.com to answer comments, questions, and all the rest. He'll pass on to me what we can. And of course, I'll be available in the workshops for our paid subscribers. For you guys that are not sure what you want to do to be a part of the big group, don't worry about it. You will sooner or later. I hope you love what you hear here. And please keep an open mind that this might be a great way for you to shorten your learning curve. So if you like what you see and you hear, please consider me your friend in the business. I'll be available to help you as best I can. You can always email me, JAJ at netwinningtrader.com, or Tony, support at netwinningtrader.com. Ask any comments or questions you want. I'll be back next Saturday with another wonderful appreciation of some of the craziness that goes on in this field. But I will promise to keep my political comments to a minimum, because I know I do have a point of view that is somewhat different. And I also will have more information for you about some trader wisdom. So don't miss next week. I think you'll like what what I have for you then. So guys, in between now and then, feel free to keep me at the top of your list, and I will do the same. I'll see you next Saturday. Enjoy the rest of your weekend. Have a great day.